Let's begin. So what is trading? So for the layman, trading represents the exchange of goods from one person to another. So I'm trying to get a diamond from the jeweler. I'm giving my money for in the exchange for the jewel is selling to me. Or maybe I'm trying to buy something from Amazon. So I'm buying maybe a tripod, and the exchange between me and Amazon is called trading. I'm giving Amazon my money, and Amazon is saving me time and giving me the goods I intend to buy. That's what trading refers to. So when it comes to the Forex market, it's the same thing, but it's just a little bit more technical. So trading in the Forex market refers to the exchange of one currency to another. So let's say you have the GBP and you're trying to go to America, and when you get to America, you need to exchange that GBP into the dollar to be able to function in the American system. And let's say you're going to the Switzerland now and you have the dollar. When you get to Switzerland or at the airports before you get to Switzerland, you need to exchange your dollar in the exchange for the Swiss francs to be able to function properly in Switzerland's economy. So that's the basis of Forex markets. And the Forex market has a liquidity of about $8 trillion flowing in and out daily, every 24 hours. So that's daily. So it's a very big market because the world revolves around the buying and selling of the currency, because we all use money. So, and for the function of money, for it to properly function, we need to exchange from one person to another. That's the basics of Forex. So what brings it all together? It is now digitalized, and we are now able to function and be able to trade assets from one person to another on your screen, just from the comfort of your home. So that's what makes it very, very easy for us to function as traders. That's what gives us our job as traders. So now, TradingView is a platform where traders come together to buy and sell assets. It's a platform that shows you how you can buy and sell assets. It has options for you to function as a Forex trader. So it gives you like the technical tools that you can use to do your job as a trader. So some of the tools that TradingView provides includes the trend line, the ray, the info line, the extended line, the horizontal ray, the horizontal line, the parallel channel. All these tools aids you to become a better trader when you learn how to use them. We have the fib retracement, the trend line based fib extension. We have the call outs, we have the long position, short position, we have the forecast, we have projections, we have the texts, we have price notes, we have tables, we have call outs, we have comments. It's a lot. So all of this combines together helps you to function properly in the Forex market. So some of these tools, I'll be explaining them one after the other. So let me start with the Fibonacci tools. So this Fib tool here is a tool, it's properly drawn out like this. So we have the 1.6 extension, we have the 1 extension, we have the 0.78 extension, we have the 0.61 extension, we have the 0.5 extension, and it keeps going down all the way to minus 0.27. So what do we use this tool for? We use this tool to measure retracements in the markets. So when we say retracement is when price decides to pick a direction and move in that direction. As price decides to start retracing, traders are ready to capitalize on the initial move. So price doesn't just move in a straight line like this. No, it doesn't do that. So price has to go from one area to another, creating higher highs and higher lows, and it keeps going down. So it creates a high, goes down, creates a new low, goes back up for some more liquidity and comes back down, and it does that both from the downtrend and from the uptrend perspective. So for the uptrend, price goes like this, comes down, goes back up, comes back down, creates a new high, and price keeps doing its thing. So this is the basics of price movements in the market. So now back to the reason why I decided to start this. It's because of the fib retracement. So when traders in the market notice an immediate move in the market and they are not able to catch up with the move, or sometimes the market can just be very, very sporadic and to just print a move. So the essence of a fib tool is to catch the retracement of that move and join in. So let's say price decides to make a move from this particular angle right here. Just give me a second, let me get my highlighter. Price decides to move from here and you miss the move. So the best thing for you to do is to wait for the retracement as price comes back to give you a retracement here, and you find your way to sell short. Or you can wait for another retracement and find a way to sell short from this initial move. So as price move in patterns, your goal as a trader is to use the Fib retracement to find areas in the market that's favorable for you to jump in. So now let's use a live market to explain this. Let me use Euro USD. So we have the euro dollar currently. This is a live market. So let's find a way to show you how to use the Fib retracement tool. So we have an area here. You can see price just pulled out and went all the way up here. So you use your Fib retracement tool. You measure from the last bit where price stopped to the top of where price decided to stop and take a breather. So you see price decided to come a bit down to the 38 extension and to the 50 extension. So the lower price is able to get on the extension, the more validity or the more viable that area is for you to go long. So let's say price comes to the 61 extension. We have loads of, you can see there's a rejection candle right around this side. So there's a higher probability of price to resume its uptrend from these areas than if price comes just to the 38 extension to continue to go up. So this is the basics of the Fib retracement tool. So it's one of the best tools to use if you are a trend trader or you are a Fib retracement trader. So some of the other tools we have is the call out. So I use the text or the call out tool. So this is a call out tool. So I use the call out tool to analyze my idea before I decide to execute. So this call out tool just gives you an opportunity or gives you a chance to type your ideas on the chart. So let's say I'm looking at price currently at this side. I'm looking at price currently here, and I want to go long. So now what are the reasons why I'm going long on this particular area? Then I pull out my call out tool. I go here. Now, what are my reasons? I see multiple rejections on this area. Multiple rejections at support. That is one of my confluence. Confluence 2, I see a Maribozu candle that pulled all the way up to give me a directional bias. 2, Maribozu candle for directional bias. 3, I see an evening star. 1, 2, 3. Evening star present. And let's say number 4, we have an uptrend. So currently we're in an uptrend. So let me pull my trend line and you can see. So all of this, you add it to your call out. So before you take a trade, you have so many confluences that gives you a higher probability of one thing happening over another. That is the basics of the market. So that's the reason why we have a call out too. And for the comments, you can comment, let's say you journal, and which is very important for you to journal. You can comment on the reason why you decide to, maybe price stopped you out or you took TP. So you just write, okay, this was a good trade. I didn't feel much emotion when I took this trade. I wasn't revenge trading, and so on. So that is the basics of the call out and the comment tool. So you need this to give you clarity before you make an informed decision in the market. So moving forward, we talk about the position size calculator. That is one of the most important tools you need as a trader. You need this position size calculator to help you to calculate your stop loss and the percentage you are looking to trade in the market. So let's get to the position size calculator. So position size calculator is provided by my FX book. So on this position size calculator, let's say I'm looking to take the trade on Euro USD currently. and I want to go long. So I click on my long position right here. I decide to buy within this range here. My stop loss is right below the previous 2 weeks, and I'm looking to target a 1 to 2 risk to reward. So now, how do I initiate this into my MT4, my MT5, or my trade locker? So how do I get the percentage to risk? So let's say I trade $100,000 account, and you come here, your position size calculator, you come here, you put the currency pair, Euro USD, you click on that. What account currency are you trading? Are you trading in JPY? Are you trading in GBP? Are you trading in the United States dollar? So let's say I pick United States dollar. Account size should be $100,000. Now, what's my risk ratio? Am I risking 0.5%? Am I risking 1%? Am I risking 0.25%? So let's say I'm risking 0.5% for this trade, or let's say 1% for this trade. My stop loss count is how many pips? So we can look at this and we see this is 36 pips in stop loss. You put 36 pips and you calculate. So for you to risk 1% of $100,000, you're going to be buying 477,000 watts of the euro as against the dollar. So on your position size is about 2.7 lots. So you're risking $1,000. So that's the good thing about using the position size calculator, because it helps you ease all the stress. It just position you in the right way to go about your trade. So next we'll be talking about for another position size calculator you can use for indices. So let's say you trade commodities and indices. My FX book doesn't provide all of that. I think the most it does was it's for gold. So let's say you trade US 500, XPX, and maybe NAS 100. You can use this Baxia market. This is a position size calculator. You have your instrument here. Let's say XPS 500, or US 500. You click on that. Your opening price, your stop loss, your deposit currency, the account balance of your account, the risk you're trying to trade, and you click on calculate. So it gives you the money at risk, the unit of trade, and you can just go in and execute your trade. Easy peasy. So next on this list, we'll be talking about drawing tools on the chart. So if you want to buy and you want to sell, we have long and short position projections in the market. So we have a short position. You want to short from this area. This is a resistance zone here. Let's say this is a resistance zone right here, and you're looking to go short. So these are some projection tools you can use to help you get the right angle or the right way to get into the market. So let's say I decide to sell short here, and this is a drawing tool that you can use to help you analyze it way better for more clarity. So on this particular trade now, I'll be risking 50 pips stop loss, and I'm looking for a 1 to 2 or a 1 to 3 hour, depending on what you are looking for in the market. So let's say I'm looking for a 1 to 3 hours. So I've decided to take 50 pips as a stop loss, and I'm looking for 150 pips TP. So when I go on and use my position size calculator like we spoke earlier, you put 50 pips as your baseline for your risk, and your target is 150 pips. So these are some projection tools you can use and some drawing tools you can use. If you want to buy, you use the long, and that's how it goes. So these are some tools. There are loads of it. You can use your forecast tool, you can use your projection tool, you can use your price range. I don't use a lot of these tools. The main one I use for projection is just the long and short, because my trading strategy doesn't really relate to all of this. So yeah, let's get the charts cleaned up so we can continue with the rest of the video. So for your fundamental analysis as a trader, you need to understand some of this fundamental analysis. And for you to get proper documentation on your fundamental analysis, you need a website called ForexFactory.com. So on this ForexFactory.com, you can see we have 32,000 traders currently online looking for setups in the market to buy or to sell short. So we have the day. Today is the Wednesday, January 29. We have the time where the news is going to come out. We have the currencies. We have Euro, USD, GBP, USD, JPY. USD CHF, USD card, we have the news, we have the calendars, we have markets, we have brokers, and now we have the currency. So on this particular day, we have AUD news coming out, we have CNY news coming out, and CNY news says is going to have a bank holiday throughout today. So if you are trading the CNY, you shouldn't be trading on this particular day because there's a bank holiday, the bank is closed. We have the GBP, we have the Canadian dollar, we have USD. So, and it varies based on the impact of the news. So we have the high impact news, we have the low impact news. On this particular day, we have loads of high impact news. And when you have very high impact news, they come out as red folders. And the ones that are maybe of low priority or maybe medium priority, we have them in orange folder. So these are the variations of news and where you can get your fundamental analysis to understand your bias and help you make informed decision in the market. That's on TradingView. So for tomorrow, we have loads of news. So if you come on ForexFactory, this helps you with your fundamental analysis in the market. This is one tool you need to keep you going in the market as a trader and to keep your job, maybe make your job become very perfect. And we have other forums on these platforms where traders have conversations. We have news and latest stories. We have other extra news, maybe like today now we're expecting Powell to talk, and some people already made projection about those news. So you can come here and have a lot of read concerning the market you trade, or the pair or the instrument you trade. So these are some things you need as a trader. So, and now let's talk about your style of trading. So in the markets we have, let me bring up my call out and talk about this. So we have different style of trading. So we have the scalpers. We have the day traders, and we have the swing traders, and the position traders. So now, what makes all of us in this market, we are trying to do one thing. We are trying to buy high, we are trying to sell high and buy low. So we are looking to buy from this area at a low position, sell from this area at a high position. That is the basics of the market. Anything anybody tells you is just trying to convince you wrongly. The only thing we do as traders is to buy low and to sell high. That is the main thing everybody do in the market. So now, for you to buy low and sell high, there are varying variations of how you can do this. So you can do this as a scalper, you can do this as a day trader, you can do this as a swing trader, and you can do this as a position trader. So now let's start with the scalper. So what do scalpers do? So scalpers want to come on maybe the 1 minute chart, the 3 minute chart, and they're looking for quick positions to quickly sell short and buy long on any given day. So they are not trying to hold position for a long period of time. They're just looking to come on the 1 minute chart, find quick positions and execute their trades. But the thing about a scalper is that when you come on the minute chart, there are loads of candles, so it sometimes gets overwhelming. That's for me though. So, but that's the basis of a scalper. I want to come in, quickly buy and sell as quick as possible and get his money out. So that's one way of trading. And the other way we have as a day trader is looking to trade a 15 minutes chart, a 1 hour chart. They're not looking to hold trade for a whole day or maybe like the next day. They're just looking to come in, find positions in the market to buy and sell daily and get their money and they're out. So if you want to be a day trader, is one way to go. If you want to be a scalper, is another way to go. The market gives you opportunity to do what you want to do in the market. It's an open environment for everybody to participate and do what they do. The main thing is for you to come and make money in the market. So, and third on the list, we have the swing traders. So for me, I'm a day trader and a swing trader. So as a swing trader, what do? I'm looking to find positions on the higher time frame and buy and sell as quick as possible. So on the 4 hour now, as a swing trader, I'm looking for things like this. So I'm looking to sell at this position on the 4 hour and hold positions. Let's say I decide to sell around here. I'm holding positions to maybe I'm looking for a 1 to 3, and this can take, because if you look how price moves generally, you can see that you can't expect price to just come all the way down. It doesn't work like that. Price has to come down, go, and continue to do things like this. So as a swing trader, you're going to hold trade for maybe 2-3 days, 4 days, maybe 1 week, and you're comfortable doing that. And why I like being a swing trader, it just gives me freedom to do any other thing during the day and not just keep myself stuck in the market. Then for position traders are looking to buy and sell on the daily time frame. So let's come to the daily time frame. On the daily time frame, they come to look for positions where they can get areas to buy and sell. So let's say on a daily here, at this particular support level here, at this particular resistance level here, the position trader is looking to buy at the end of this daily close and looking to hold for a 1 to 2, 1 to 3 risk to reward, and you see he's able to get it. But a position trader is looking to hold trades for 1 day, 2 day, 1 week, 2 weeks, and they are comfortable with that. And these are guys that use like loads of money to trade. So these are just the different variations to trading in the market. It's not a one size fits all. You can do anything. You can be a swing trader, you can be a day trader, you can be a scalper, and you can be a position trader. So as you keep learning the market, you find your ways to find what resonates with you personally, and you navigate your way in the market through this. So these are some tools you can use. These are some trading styles you can use as a trader. So now let's get to another topic, which is market structure. So like we said, market is about buying and selling, but in the Forex market, in as far as we are trying to buy low and sell high, the market moves in waves, it moves in patterns. And when you understand price action and market structure, you're able to navigate your way a lot better. So now, what does market structure means? Market structure just explains how price move from one level to another, one level to another, one level to another, one level to another, creating higher highs, higher lows as it continues to go. So it creates a new high, new low, new high, new low, new high, new low. That is market structure. So if you see what I just drew here, it basically depicts what is going on in the market currently. We have price create a new low, made a bit of high, sellers are ready to sell here. We had new momentum in the market, new position to sell, and price just keep going in waves. That's just what market structure is. So we can expand on this in later videos, but that is the basis of market structure. So as you continue to learn and continue to expand your knowledge in the market, you understand how market moves in waves and where to buy and where to sell in the market. And let's go on support and resistance. So I know a lot of traders have seen what they call support and resistance from a lot of videos, a lot of books and everything like that. But I'm going to explain what support and resistance mean as if I'm explaining it to a child, so we can get a more better understanding. So support and resistance means the ceiling. The ceiling refers to support. So let's say you have a ball and decide to bounce the ball on the floor. Once it gets to a roof, onto a ceiling, and it can't go more than that, that is a resistance level. So that's what it means in the market, a resistance level. And let's say we have a fall, we throw something from the top to the floor, and the force of gravity decides to push that thing down all the way to the ground. But when it gets to the ground, there's no way for it to go back to again. That is the support level. So that's what we have in the market. We have resistance levels and we have support levels, and they are everywhere in the market. Just as it is on the 4-hour chart here, we have it on the 2-hour chart, we have it on the 1-hour chart, we have it, you can see it all shows the same thing. We have it on the minutes chart, we still have it on the daily chart. So we have support, 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 we have resistance, resistance, resistance. So it refers to ceiling and refers to lows in the market. The ceiling referring to resistance, the lows referring to support. So when price gets to support, we have ready buyers ready to buy off support. When price gets to resistance, we have ready sellers ready to sell short and take their money in the market. So these are a lot of things you can learn. I've just decided to just give a quick video and combine everything together. So some other styles we have in trading, we have like traders that decide to trade trend lines. So some traders trade trend lines this way. We have the uptrend, we have the downtrend. This is a downtrend here, there's an uptrend here, And you can see that in loads of places in the market. So let's find another downtrend. We have another downtrend here. We have another downtrend here. We have an uptrend here. So if you are a trend trader, you tend to see a lot of this. So you now have to find a way to find a way to navigate your way in the market in terms of knowing what time to buy and sell in the market. I am not a trend trader, so I know trend traders that make banks in the market. So when price gets to this particular point here, they'll just sell and find their way to take TP. When price gets to this area here, they find a way to sell. They find a way to sell and find profit in the market. So that is the basics of trend trading. So all this together encompasses what you need to learn as a beginner's trader's guide. So if you are somebody that use indicator, this TradingView platform provides you with all of the indicators. You can just come on this indicator platform. If you want to use fair value gaps, if you want to use the moving average, as you click on it, it brings out the moving average. This is the line here. So some traders use moving average, some traders use indicators. I don't use it. I like price action. I like my charts very, very clean. So yeah, this is basically a quick rundown of what a beginner needs to understand, some of the tools you need to understand, some of the things you need to navigate the Forex market as a beginner, as an intermediate trader. You can pick one or two learning from some of these nuggets I've shared. So if you want to keep learning stuff like this, don't forget to comment, share, like, subscribe, as we'll be here to provide value as long as this channel continues to exist. I'll see you guys in the next video. Bye for now.